Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, Phil, I think we can safely say that summer's started. It's the end of June, if you can believe that. We're into the Euro knockouts. At the time of recording, England's still in. we're closing on the election, which seems to have been going on forever. And it's turned rather hot, hasn't it?
It has, yeah. I mean, we'll keep off the football because I know that's been a contentious one this week, hasn't it? So we'll keep away from the football.
Well, it's contentious with me because I watched the game yesterday, and kind of wished I hadn't.
Did the paint eventually get dry?
Well, yeah, I was throwing cups at the TV screen.
Are you that energetic? I didn't have you down for that energetic, to be fair, and passionate for Curtis, to be fair. But yeah, they were expensive cups.
No, they were empty cups.
So yeah, it's a warm week this week. We've got a fairly tight podcast, and there is a reason for that, which we'll come on to. But I'm also conscious that Curtis and I are probably in very hot offices without our fans on, so we don't get the sound interference on our very technical and high spec microphones, but not quite as high spec and technical as Carl Davis's, as we
no, definitely not. No, we are taking one for the podcast, aren't we? Because we've both got our fans switched off.
Yes,
so
we are.
This could be a short pod.
But as we alluded to there, in today's podcast, you will, after the headline coverage this morning, we'll share a slightly more extended snippet from our monthly catch-up with Derren Martin from CAP HPI. And the reason for that is obviously, as Curtis has alluded to, we're at the half-year point now. So we're going to be chatting to Derren about the June performance, in particular, what's been happening in the market. We'll obviously touch on fuel type performance, etc. But more importantly, we'll also talk to Derren about what he's been seeing in this year so far as we approach this end of the month, and more importantly, what to expect for the remainder of 2024 as people start to think about the second half of the year.
Yeah, and the full interview is on your podcast feed, so do check it out because it was very revealing. And as you say, we did spend a bit of time with Derren looking at those half-year trends, and also, but behind the scenes, we're working on a couple of special podcasts, and the first one that will come up is likely to be with the UK boss of one of the new Chinese brands. So we'll share more details after we record it because we don't want to tempt fate. But if it does come off, Phil, it's going to be a good one. So, you won't want to miss that one.
Yeah, I mean, I'm very, very much looking forward to that conversation. I mean, putting aside it's for the podcast, but actually from a insight perspective, with my hat on, I'm very much looking forward to that conversation.
Yeah, definitely.
You're listening to the Motor Trade Radio podcast, powered by Motors.
So headlines this week come from the FT, car dealer and auto retail agenda, starting with Stellantis threatens to halt UK production over EV targets as Vauxhall owner ratchets up demand for UK government to stimulate retail demand. And staying with the ZEV mandate, the pressure of compliance on dealers is laid bare in a new NFDA survey. New research shows car buyers value customer service over getting a good price. And CDK Global tells car dealers hacked software unlikely to be restored before the end of the month as dealers in North America revert to using pen and paper to process sales and repairs. Can you imagine that, Phil?
Yeah, the good old days. Highlighters will be out and Excel sheets will be out.
Exactly, yeah. But before we look at these headlines, here's an extract from our interview with CAP HPI's Derren Martin talking about June's trade values.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Let's start off really looking at the month of June and what happened through that. We know that the headline figure at 3-year 60, which is down 0.1% or the equivalent of £25. But more importantly, how has this compared to previous movements for that kind of month and what you expected to see?
0.1% down. And that is a really strong month for June. It's the strongest June that we've had. If you ignore those two COVID years of 2020, when obviously everything sort of reopened in June and it was a relatively strong period, and then 2021, which was obviously crazy with values going up because of semiconductor shortages and you couldn't get a new car. If you ignore those 2 years, this is the strongest June since 2009. So it is and it's about 1% stronger than the average over that period as well. So it's a very strong month, and it's a continuation of a theme really for the last few months, and we kind of feel it's down to sort of demand in the retail market being pretty good. I mean, it's not through the roof. It's not another 2021 situation, but it is good, and that's mainly due to sort of interest rates sort of stabilising, inflation stabilising, and I think people have got used to the sort of the cost of living concerns that they're faced with now. So if you need to buy a car, you're still going to go and buy one. If you want to buy a car, you're thinking, well, I'm in this situation, so I'm going to go and buy one. Maybe you're going to downsize or buy one slightly older, but you're still going to go out and buy a used car. So that's kept it all relatively strong. And off the back of that, that's the demand side. On the supply side, there's 3 million fewer registrations in the last 3 or 4 years than there would have been without COVID and semiconductors. So you've got lowish supply and highish demand.
And I mean, we always, every time we talk to you, we talk about the importance of Cap Live. You know, we talk on our regular catch-ups about the month because of that still snapshot of the month. But, you know, we always talk about the importance of live data and as the market sort of changes throughout the month. Have you got any observations as to how prices fluctuated? Have they continued to firm up as we've gone through the month? What have you been observing?
The interesting thing for June, I think, is that although it's a 0.1% movement, you've got some that have gone down in value, and they don't all go down in value in one go. We move things throughout the month as we observe it. So you've got some vehicles that have moved well. I think the Alfa Romeo Giulietta diesel is our biggest drop this month, and that's over 10%. So which is over £1,000 at 3 years old. So there's so many moving parts within those averages, and you have got models that have stabilised through the month. You've got some that dropped early in the month and then returned back to not moving. So on the face of it, it looks like it hasn't moved over the month, but it actually has. So if you're buying and selling vehicles during the month and you're taking live into account, it just makes sure that you're maximising what you're selling for, and that you're not paying too much for a vehicle when you're buying it. And maybe you've got a little bit of a head start over those who do only have monthly. But overall, that 0.1% movement, it hardly moved through the month. So it has been really stable. It's not like it dropped by further and then recovered. Since really the middle of May, it's the averages have hardly moved. But within that, as I say, there's all sorts of differences within that. We've got, I think, Seat Arona diesel went up nearly 7%, and that Alfa Romeo Giulietta diesel went down 10%. So make of that what you will, really. It's not a fuel type issue because one's gone up and one's gone down, but there's all sorts of different nuances in the market.
And Derren, turning to age bands, what trends did you see across the 1 year point and across older cars as well?
So the 1 year point, there was a drop of 0.2%. So very, very similar and very strong again. That's just about £100. That area of the market pretty strong. I would say the only caveat on that, and we'll probably go into this, I'm sure, is electric vehicles. You've got some really keen new car offers as manufacturers chase the ZEV mandate. So that does affect some of that late plate stuff, but generally the younger stuff has performed okay. At 10 years old, there's a drop of 2%, so that is quite a bigger drop compared to other age bandings, but that is only equivalent to £75. So it's not seismic there either, really. So we are also seeing, so when you look at some of those older cars with maybe a little bit more damage on, we are seeing that buyers are now buying them, whereas because they've got to pay a premium for a cap clean car, maybe. So it's quite strong all over, really. Whereas in the last sort of 2 or 3 months, it was cap clean, got to buy a cap clean car. Now people are realising that you might have to go down and buy a car in a average condition rather than a completely cap clean one.
And how did the various vehicle sectors perform? I'm assuming it was a good month for convertibles, bearing in mind the weather we've got.
So convertibles, they are still a seasonal vehicle, but maybe don't move as much as they used to. But they've gone up. Convertibles have gone up by 0.8%. And they've been going up for the last couple of months, and will probably stabilise maybe in a month or so's time. So you tend to get convertibles from sort of March onwards heading up in price, and then they come down in that sort of final quarter and over the winter. So that's been the strongest sector. Most of the mainstream sectors have behaved within sort of 0.5% of each other, really. So not too much going on individually by sector there, but obviously the devil's further into the detail than that. Interestingly, though, SUVs actually went up 0.2% at that 3-year mark, although they did drop slightly at the 1-year point. So they've performed okay as well. So and that's sort of medium SUV where there's quite a lot of volume, that's gone up by 0.3% on average. So that's kind of not too much differences between what's happening within the sectors apart from convertibles that have gone up.
And I mean, you mentioned the vehicles earlier, and it's interesting you made the point about those older vehicles now, but you talked about those two vehicles, one going up, one going down. Looking at fuel types, what are you seeing now? Because it was, by accounts, a very strong month overall for petrol and diesel firming up as well. But what are you seeing now in terms of this sort of step in between sort of petrol, diesel, hybrid, plug-in hybrid, and then EV in the sort of the relationships between them?
Petrol remains the go-to fuel type. That's what everybody wants, sort of, and especially if it's reasonably priced. The sweet spot is sort of 15, 18 grand petrol vehicles. That's what everybody wants. Petrol cars actually went up this month, 0.2% on average. Diesel dropped by 0.2% on average, so not too much in between those. Diesel has been coming down slightly stronger than petrol over the last few months. Hybrids, pure hybrids down 0.2% and plug-in hybrids down 0.5%. So again, fairly similar to each other. Electric vehicles have dropped by 1.7%. So you can look on that there's two ways of looking at it, really. From a negative point of view, they've dropped by a lot more than the other fuel types. But on the positive side, that is the strongest month we've had for EV values over the last few months. I think it's the same as we did in March. Since March, we've dropped values by more on electric vehicles. And I just stress this is averages. And there's the examples within electric vehicles really is that you've got some going up, some going down, and it's still really messy in that area. So it's just there are not all dealers are buying them. The sweet spot again on EVs is kind of sort of 15 grand and below. But as a caveat again on that, vehicles at that bottom end, like the Nissan Leaf, for example, they've continued to drop. They're now being squeezed by maybe more desirable vehicles that are now cheaper. So the Tesla Model 3, we're seeing those in the teens now. So for a little bit more on your monthly payment, you can go and buy something maybe a little bit more aspirational than previously at that bottom end. So yeah, there's been lots going on by fuel type. I think electric vehicles remain the most fascinating area, but still really low in volume as well. I think they're around 5% of the volume when you look on sort of advertising portals. So, but it's what everybody's talking about. But yeah, just as some examples this month, that the Corsa electrics come down another 7%. The Nissan Leaf's come down 5%, and that's like nearly £500. The I-Pace continues to drop. That's come down 4% or £750.
Well, as always, it's always a great interview with Derren, and clearly there's a lot going on. But I think the clear message with this is the market seems to be stabilising a little bit.
Yeah. Yes, I mean the month-on-month movement is minimal and actually low for June, isn't it?
It is, yeah, and obviously thinking about the fuel type performances, what's happening, some of that shortage of supply now starting to lay bare now in the market as we knew it kind of would do. So again, great interview, little chat there with Derren. That's just a snippet of the extended interview that we, as Kirsty said earlier, that we did with Derren Martin. So do head over to your podcast feed for the full interview there with Derren Martin and every other interview that we share through our podcast feeds.
So first headline this week is from the Financial Times, and it is Stellantis threatens to halt UK production over EV target. So this is a Vauxhall owner. Stellantis has warned it could stop production in the UK unless the UK government does more to stimulate demand for electric vehicles or change its current electrification policy. So this actually came from the SMMT annual summit, which was held in London over the course of the week. It's a big event, and there were a number of news stories that came out of it. And I think the timing for Stellantis was absolutely perfect because it's really flagging up to the next occupants of number 10, whoever they should be, that they need to look at the ZEV mandate. The ZEV mandate is not working for OEMs, certainly OEMs who are producing in the UK, but also dealers. So it wants to see more stimulation of the market. And the comments came from Maria Divino, who's the boss of Stellantis. She's the top UK executive for the brand, and very much warning that the EV mandate is slowing sales, certainly in terms of EVs. And she goes on to say, if this market becomes hostile for us, then we will enter an evaluation of producing elsewhere. Stellantis production in the UK could stop. So she's being very, very clear there. So, government really does start to need to listen now.
This is, obviously in terms of timing, I think there's been some thought put behind this one as, whoever gets into number 10 on the 5th of July. And, we've had sight of some of the manifestos. They've obviously got some big dossiers that they'll be looking at, starting on the 5th of July. And within that will be lots of things that they need to consider, some which will require spending, some that will be kind of an easy win, tick box and doing something. But clearly, I think within all of this, there's a lot of comments at the minute, a lot of speculation around the UK-EU relationship in a post-Brexit environment. There's a lot of conversation around the China-UK relationship and tariffs. But, what they've also got to consider is UK labour and production and manufacturing. And, what you don't want, and I'm sure Mike Hawes and others have been very vocal on this, is, people like Stellantis, closing or slowing down production at their UK plants, because that's dangerous in general for industry growth and business growth within the economy for the UK. So, I think we've seen Carlos a few times recently being very vocal, very opinionated towards the UK government. And obviously they've used the platform at the EV Summit there with the SMMT to be very clear on their threats and intentions on this. But, the ZEV mandate is clearly, it's causing some unrest and some challenge, isn't it, for these OEMs?
Yeah, it is. And these comments follow hot on the heels of, as you say, Carlos Tavares. We only reported on this a couple of weeks ago, saying that Britain's EV policy, he summed it up in a word. He said it was terrible. And let's not forget that Stellantis, as the owner of Vauxhall, it has two major plants in the UK, Luton and Ellesmere Port. It employs over 2,500 people, so it is a major player in the UK market. And this is really, really trying to put this on the agenda for whoever's in Downing Street after the election.
Yeah.
And we're not taking bets on that, are we, Phil? Make that clear. There are no bets. There are no bets on the Motor Trade Radio podcast.
No, definitely not. No insider information from us on this one, Curtis. No. But no, I think you touched on a point there. I mean, there's in one of the manifestos, there's obviously talk about changing the 2035 back to 2030. When you've got a ZEV mandate at 22% for cars this year, rising to 22% next year, 2030, 2035 makes no difference to these manufacturers at this minute in time. Yep. I think we were chatting before the show, that there's been views that should they combine the cars and LCV into one target, that might work well for some manufacturers, maybe not so well for some of the other manufacturers. But also, a lot of the noise coming back out of a lot of the manufacturers now about is new energy vehicles, NEV, which is the hybrid world. Yeah. And that doesn't take incorporated into the ZEV mandate. It's going to get very, very messy. And you would hope at some point that ZEV mandate doesn't necessarily go away, but actually it has some kind of revision based on the current state of the market and the problems that it could potentially cause for these OEMs.
And we'll stay with the ZEV mandate for the next story, which comes from Auto Retail Agenda. And the headline there is ZEV pressure laid bare in NFDA election survey. So this is research carried out by the National Franchise Dealers Association, very much ahead of the election to see what's playing on the minds of retailers at the moment. And it found that 69% of retailers said their top concerns were slowing demand in EVs and meeting ZEV mandate targets. And this was actually way ahead of the second highest concerns, which was staff and the skill shortage, which was accounted for 33%. So you can see what dealers are particularly focused on at the moment, because they are very much at the sharp end of the ZEV mandate.
Yeah, and just from that recent interview with Robert Forrester, I mean, they've got enough challenges going on, be it from the discretionary commission situation or minimum wage and things like this. I mean, there's a lot that the dealers are tackling and dealing with at the minute, and they could do without these unrealistic targets or challenges that will potentially present themselves. And I think only last week we talked about Volvo reintroducing the estate version to their market, but doing it in a plug-in hybrid. Now, that is reported to be a short answer to a problem, as in supply some product that will actually meet demand for our customers whilst we continue down this road. So I think clearly there's a lot to play out, and it seems to be a little bit of a election government-led conversation today, Curtis. But a lot for the UK government to get their head around that has a very big influence on the automotive sector.
Yeah, you're right, and retailers were actually asked what's the priorities they want the next government to address, and it's the top of the list. It was stimulating the private EV market, and that was actually ahead of reforming business rates. And the SMMT, of course, has suggested a halving of VAT on new private EV sales, and they've also been calling for that reduction of VAT on public charging. So there are ways to address this. It's whether or not anyone's actually listening in government, or will do after the election. We'll see. We'll return to this, Phil.
I think there's going to be a theme for the next few weeks on this podcast, Curtis. I get that feeling.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media Available on demand wherever you are on your podcast feed.
So heading over to Car Dealer, the next headline is that car buyers value excellent customer service more than getting a good price. And this is from some work myself at Cox Automotive did with Regit, our friend of the podcast, Chris Ashton Green. And this is that the firm quizzed 2,000 people who were in-car drivers and found that customer service remains king, and that the great service needed just to be face-to-face with buyers, valuing simple online processes is obviously remaining a priority, and that the survey also found information gap around electric vehicle cars. So leading back to our earlier thing, the survey is kind of saying that, yes, dealers remain centre of that relationship, that customer service. They're still valued to offer that customer service. And, customer service, as always, I think anybody that operates in that sector is fully aware, remains the number one priority. But also highlighting that, there's a knowledge gap around battery electric vehicles now being cited.
Yeah, there's some great stats in this from Chris Ashton Green and Regit. So 68% of these 2,000 car buyers said they would rather spend more on a car as long as it came with excellent customer service rather than getting a great deal but poor service. And I go along with that totally. I mean, I would rather pay a little bit more and have really, really good service. That would be a driving factor, certainly for me. And that is a high percentage, isn't it?
It is, yeah. And I think, the key with this is, at the end of the day, with all the things happening around the ZEV Mandate and consolidation and an agency model within the sector, what it's clearly highlighting is that at the middle of all this is the dealer, the retailer, but they've got to deliver that high level of customer service. And by doing that, the survey does cite that they are prepared to pay that extra for that kind of service. Cheap isn't always better, is it, Curtis?
No, definitely not. And 46% of respondents believe everything from finding a car to arranging delivery should be done online. So that's under half, which kind of suggests that the other half are happy in the physical world and transacting on forecourts and in showrooms.
Yeah, and there is that Chris does conclude to say that the value of customer retention is higher than ever, and that brands and dealers that live by traditional values of excellent service care will have the best chance of securing it. So, and how customers care is delivered will be the debate that rumbles throughout 2024. So it will honestly be a contentious opinion, and obviously we won't get on the topic of agency model and how that operates, but essentially this is customer service, isn't it?
Yeah, it is very much so. Yeah, and customer service is a theme that we report on a regular basis because there's a lot of good research out there that we have been reporting on. So again, we will return to that. But final story for this week comes from Car Dealer, and this actually picked up a lot of press over the course of the week, both in the UK dealer press, but also in the international press. So we'll focus on Car Dealer because they've actually done a very good job in pulling together the different strands from different sources. So the headline is CDK Global tells car dealers hacked software unlikely to be restored before end of month. So that's end of June. So this is a report on how a cyber attack on CDK Global's dealer management system software has really impacted the dealers across North America. And certainly my understanding of the story is that it is a North American story, but obviously, dealers in the UK, they're using DMSs, so they will be interested in how this happened and also how it's being resolved. But the attack was actually hit Tuesday, the 18th of June, there's around or just over 15,000 dealerships in the US that use CDK, including some big US groups that operate in the UK. This has resorted to dealers actually going back to basics and writing down orders and processing repairs using pen and paper and spreadsheets.
Yeah, I mean, it kind of shows, one, how this can hit the size of somebody like CDK. But secondly, that kind of reliance on these kind of systems when something does go wrong, then you have to revert back to the old pen and paper, as you put it there, that it does change things. I mean, it's quite an interesting one, and they talk about an interview with that was conducted via Automotive News and with Brian McDonald, who is CDK's global chief executive, and that he said that he was in talks with many dealers, OEMs and partners directly, and that the company was working around the clock with leading third-party experts to get dealers back to business as usual and as quickly as possible. So it is quite an interesting one. I've been listening to this most of the week since it happened, and there was an interview, and it's not covered in here, but there's an interview saying about and I don't know if these were the hackers, but this cyber criminals, that a lot of them operate out of Russia, and Russia turned a blind eye to it as long as they don't target Russian businesses. So they're quite happy for these criminals to operate. They're actually fairly clear in terms of that they are there, but it's kind of a blind eye, and they won't do anything with it as long as they don't target Russian businesses. So it's quite fascinating, this, when you start to get into the detail.
It is, because Bloomberg reported that the cybercrime gang behind it, called Black Suit, they're behind the attack, and they were demanding a multi-million-dollar ransom. And the piece in Bloomberg actually went on to say how it's actually paralyzed car sales across the US. Now, I haven't seen that a bit about paralyzing car sales across the US anywhere else. And I don't think we'll actually know until we see the sales figures at the end of the month. But this will have a significant impact on US new and used car sales, and indeed, after sales.
Exactly. And I think, the whole point with this with Car Dealer covering it, and as you say, great coverage by Car Dealer on it, this is, although it is a North American situation currently, but it does hit some of the big operators that do have big businesses in the UK, but it also highlights this problem, this cyber attack issue to businesses, or whether that's, businesses operating in the global space or local space, such as the UK and others. So it does highlight how quickly this can happen and how it can have a direct financial impact, because, as you say, Curtis, this is, if it's Bloomberg are reporting correctly, then this has hindered sales. This has hit the commercial impact of these businesses. So I think that's it for this week. We've obviously tried covering a lot. As I say, we shared that little snippet there from the interview with Derren Martin, and as always, we would highlight to head back over to the full interview with Derren. Very open and sharing his views on, as I say, this time on the month of June performance, and as we move into the month of July, and more importantly, what the market looks like for the first half of 2024 and what to expect for the remainder of the year.
But that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.